This entry in the Path to Electronic Trading series is sponsored by CQG.
I got enamored by the markets when I was in high school. And when I started to go to college in New York City, I was going to school in Lower Manhattan, not far from Wall Street. So the school I went to, Pace University, had a placement office. And I got myself a part-time job working for a firm called Oppenheimer Company in the late 60s. And I apprenticed my way through the operations area. Then I left and went to Merrill after I graduated, worked my way up through Merrill and eventually worked in a branch office in White Plains, New York. And then I worked on the New York Stock Exchange floor, building a training program for their floor and order room personnel. And I started to become enamored with technology around the same time. So Merrill Lynch, big wirehouse, as it was called during the day, hundreds of branch offices globally, big mainframe trading system, order management system to route orders to the major exchanges. And I was working as part of the order room in New York, and got seconded to a team that was building a separate options order match system. The options exchanges had taken off from the 70s into the early 80s, and Merrill's business volume of options trades was increasing, and the functionality they needed in the existing system wasn't cutting it. So they built a separate system on a minicomputer at the time, and I was a part of a team that worked on functional requirements and ultimately the testing of the system. And we rolled it out to their mainly domestic U.S. branch offices. It would capture an order entered by a branch office location. It would edit it, store, and validate it, route it to an options exchange. So the Amex, the CBOE, et cetera, would receive the fills that came back, match that against the order, and set the fill execution back to the entering location. And then the extract at night was the trade processing file of executed trades between the Merrill and the exchanges, and ultimately the Options Clearing Corporation. SIAC was co-owned by the New York and American stock exchanges, and we were the engineering arm of the exchanges in the day. So we built the technology that was used on the trading floors. Some of the systems I was responsible for, one was the automated bond system. It was a corporate bond trading system that the exchange had built and offered to a small number of their members. And some of the other, what was called switching and order processing systems. So anything to interface with a firm to get order flow in and out of the exchanges, and ultimately down to the floor where separate systems manage the order books, the limit order books that the specialists used. So some of us were product and project managers for those types of engineering projects. I was responsible for implementing some of what was called program trading systems in the mid to late 80s that were used for multiple order lists or programs of equity orders that were sent to the New York Stock Exchange. And so we had onboarded a number of firms, some of the top major investment banks and broker-dealers at the time with that. So managing the installation, the testing, the certification, and the go live for those firms. And it was pretty interesting to see the volumes they would send in. And some of that ultimately resulted in that capability, I think, helped fuel the crash back in '87. Hutton was bringing in a new trading system. It was a multi-product, large mainframe trading system. They were replacing a few other systems they had there. And part of the project, it was a large project, was the acceptance of the system, some of the user acceptance of the system there was an external vendor they were acquiring this from. Interfacing with the trading desks, the various departments, operations, technology, et cetera, to understand the scope of the project, how it was going to be managed and implemented and turned over. I actually left before that project was completed, and that was in the beginning of '87, and the market crashed in '87, and ultimately EF Hutton was acquired by Shearson, and that system was never fully implemented. I hadn't heard of the name in my SIAC days and my Hutton days. A minicomputer manufacturer in Massachusetts that was building and selling large mainframe-based fault-tolerant computers. And a lot of their audience was broker-dealers, exchanges, market data vendors. And I was hired as an expert, as a subject matter expert in their New York office where a lot of their clients and prospects were. So we were selling into the New York and the Chicago exchanges, and ultimately broker dealers in other parts of the U.S. And then my role expanded to Europe and the rest of the world. I was the capital markets industry marketing manager for Stratus. I was with them for about 9 years. And I moved from New York to the Boston area where the company was and is still based, selling technology to organizations globally. So we broke into a number of major European and Asian markets, Thailand, the Chinese markets in Shanghai, the Indian markets, the National Stock Exchange of India, the London Stock Exchange, et cetera. So we sold technology into about 40 different major exchanges and most of the major market data vendors for their networks. I joined IBM. I was in a somewhat similar role as I was at Stratus, which is why they hired me. I was a segment manager for exchanges and e-commerce, and my territory was, as I described it, everything from Alaska to Argentina, North and South America, Central America, and the Caribbean. So I covered all the exchanges and capital markets providers in that territory. I had two counterparts, one in EMEA and one in Asia. And we sold into that vertical industry. And it was solutions as well as the underlying technology and infrastructure. And in some cases, IBM was marketing and selling technology that wasn't IBM label. IBM at the time was one of the biggest value-added resellers of digital equipment, of DEC technology as an integrator. So it was an interesting role to step into from where I was at Stratus. And one of the things I found out having an IBM business card is I can call on any exchange head or any major bank. The fact that I was from IBM, I could get an audience with them. I just had to have a pretty damn good story to tell once I got the door open. So it was pretty interesting as part of my global career in really the fintech space. I had bumped into the name Jerry Tellefsen when I was at Stratus. I went to find an opportunity at the Chicago Board of Trade in about 1987, 88, and ultimately we bid on something that became Aurora. And I asked Bob Giroud at the time, who was their chief technology officer. I said, "Who else is you talking with?" And he mentioned a couple of names, and Jerry Tellefsen. I said, "Jerry Tellefsen, never heard of him." Ultimately, I get to meet Jerry. We became lifelong friends. When I was looking to leave Stratus, Jerry brokered me into IBM. Jerry got me placed in IBM. And when I went to leave IBM, I went to talk to Jerry. I said, "You know what? I think I may want to try some consulting. I think I've got some skills, knowledge of the marketplace, and it might be something I get the hang of, or something. It might be a transition to something else." So joined Jerry the beginning of 1998, and here I am today. Jerry retired in 2005. I've been doing this for 23 years now, and I'm still having fun with it. Every day, I don't know when the phone rings, what the next gig is. So it's working with large investment management firms, exchanges, fintech companies, and everything has three major what I call pillars or legs of the stool, the types of projects we work on. So people hire us because we've got deep, intimate knowledge of the business, the nuts and bolts of how everything works: equities, options, futures, fixed income, foreign exchange, and these days cryptocurrencies. Front, middle, back office, full scope of the life cycle of trading. The second leg of the second pillar is really technology, the implications of technology, the adaptation of technology, application software, middleware, et cetera. And the third leg of the stool is regulatory compliance. Every project we seem to touch in the last 10 or 12 years has some sort of regulatory aspect with it. So it's the Securities Acts, the 33, the 34 Act, the 40 Act, the Commodity Exchange Act, Dodd-Frank, MiFID, et cetera. And so a lot of the project that I and my colleagues work on have those three major components associated with them. So Aurora was initially designed, or the vision was, a system to route orders to the periphery of the pits at the Board of Trade. The Board of Trade put together a committee internally. They did some requirements, and they put that out for bid. A lot of it was, who's got the best capability, who's got the experience in the area. They were going to pilot this on one or two pits. Some of the less active products at the time to mitigate some of the risk. You wouldn't want to implement it with your busiest products and find out it had some bottlenecks or it didn't work. And so the technology team at the Board of Trade was responsible for implementing that. And a lot of it was the rate of adoption, the take-up rate by the members, that, technology beginning to encroach on the open outcry environment was politically unacceptable at the time. This is 1988, 89, and there was a lot of resistance. And so it failed because of the lack of user acceptance and user involvement. We got a call back in 2007 from a gentleman who was the head of strategic planning at the Singapore Exchange. He actually was one of the few Yanks down there. Came out of Chicago, got a gentleman named Ron Newell. And Ron ultimately hired us to build a global clearing strategy for the exchange. Up to that point in time, you had the Singapore Stock Exchange, you had SIMEX. The two of them were brought together in a merger, and you had two sets of systems and people. You had these silos. And OM technology, which is now NASDAQ, OM was the major vendor to SIMEX and the stock exchange, and they were trying to sell them two clearing systems. And so Ron brought us in because of the confusion or lack of scope that the local staff had down there. And we built a global clearing strategy that ultimately would be a single multi-product, multi-currency clearing system. And ultimately, they chose that from OM. Standards like FIX, OM was touting their own proprietary interface, and we had convinced them to implement it that way. And interesting project, spent 6 weeks in country with them, made some good friends, some good contacts down there. Ironically, while we were in country, bumped into a bunch of people we know from the business that happened to come through Singapore at the time, some from Chicago, some from New York and Boston. So the crossroads of the world in one place. And separately, in the case of Shanghai, when I was at Stratus, I actually sold technology to the Shanghai Futures Exchange, their first iteration of electronic trading. And that was approximately 1995. So through a mutual Chicago contact, they reached out to us, and we sat down and kind of walked through what's the lay of the land with electronic trading in the futures world, what's best practices out there, what are exchanges doing in the US and Europe and other places. And we helped them really put together some understanding of where they would be going with things like algorithmic trading, support for algorithmic trading, support for co-location, things like that. So it was more training and strategy than any kind of development, but interesting to talk to those folks. I'd been to Shanghai probably 17, 18 times between 1994 and 97. So I knew the area well, I knew the city well, and knew the dynamics of the exchange. And certainly with my involvement with the Futures Industry Association, had bumped into a number of Shanghai futures people both before and after that project. So it was a pretty interesting global project to work on. Through a mutual friend, we were introduced to BrokerTech in the end of 1999. Ultimately, BrokerTech hired us to do the user acceptance of their electronic trading system. BrokerTech Global owned the cash market. BrokerTech US and the equivalent in London ultimately went on to create a futures exchange and a clearinghouse. But in the case of BrokerTech, they contracted with OM for their electronic trading system. They went through an exhaustive analysis of looking at 50 or 60 potential entities to either partner with or license the software from. So we did the user acceptance with them at the end of 1999, and they went live 21 years ago, the end of June in 2000. And at the time, the fixed income govy markets were majority voice brokered. It was Cantor Fitzgerald, Garban, Liberty were the three main voice broker firms at the time, and Tullett in Tokyo. So they captured a majority of the fixed income market share from those voice brokers in the 2000-2001 period. And after going live with that, doing a number of functions, including running their project management office, the CEO asked me to help out to complete their business and capital plan for a futures exchange. They were going to take on the Board of Trade and the Chicago Mercantile Exchange to go after futures trading on the bond complex and euro dollars. And they licensed an additional system from OM to do that. They set up a legal entity, the BrokerTech Futures Exchange, the second legal entity, the BrokerTech Clearing Corporation, filed for designated contract market status and derivatives clearing organization status with the CFTC. They received that approval, and they were about to go live when 9/11 had hit. So they really launched into early 2002, gained some market share, and at about that time, the Justice Department came down on consortium-owned initiatives, and BrokerTech Global was owned by 14 of the major tier one investment banks. So BrokerTech sold the cash business to what was ICAP, and they sold the futures exchange and the clearing corporation to Eurex, and that became Eurex US. Ultimately, the futures business petered off and was shut down. The BrokerTech cash market has gone through two ownership changes, ICAP, and then now two years ago, CME, and several platform changes. And now the BrokerTech products are listed on the Globex system at the CME. We've been approached by a number of fintech companies over the years to do a number of different things. Part of it is, understanding the dynamics of the U.S. marketplace. We've had some fintech companies that were based in Europe or Asia that wanted to crack into the U.S. marketplace. So what does the landscape look like? Who are the major players? Where do we begin? How do we gain market share? How much share can we get? What's the investment? Done some competitive analysis for fintech companies. That's number one. Number two, we've done some business plans and go-to-market plans for fintech companies who wanted to create a new offering. And so what is the revenue and expense slate look like? What's the opportunity for us? How much share can we get? We've seen several of them really get crushed by the lack of volume and then now COVID. So that they've those macro issues have greatly impacted fintech space in some cases. Over the course of my career, I've certainly have had exposure to many dozens, if not hundreds, of various fintech companies that provide application software and middleware, connectivity, et cetera. Most of that's been, capital markets and derivatives, but I've seen some banking solutions, some retail solutions. But clearly, in my role, in my consulting role over the years, and even when I was at Stratus and IBM, being aware of the major players that are out there, who's using them, the pros and cons of their offerings, looking at industry consolidation and acquisitions. I've kind of monitored the landscape of that over the course of my career, most of my career. We just finished a research project for a client who wants to look at the market to trade tokenized securities. So if you can imagine an ADR, an equivalent would be a token on, Apple, IBM, Facebook, whatever, where they're offering the trading of this in a instantaneous settlement on a distributed ledger technology on a blockchain environment, and concurrently have a portfolio of the underlying equities held by the custodian. So there's a one-for-one relationship between the token and the underlying stock. They believe there's a market for that, and they're looking to see what the cost benefit is to offer that in the US. There's a couple of crypto platforms that offer this outside the US today. One is Binance, one is FTX, and they've had a slow start, had some slow success, what looks like mainly retail volume, but that product is not available to US persons today. And the entity we're working for, it's a joint venture of 3 entities. they're looking to enter the marketplace on that. We've also looked at operational risk aspects of crypto trading platforms. How are they set up? What could bite them? We looked at continuity of operations, business continuance, code reviews of their infrastructure relative to are they designed versus best practices you would find in a traditional capital markets, fintech vendor or capital markets trading environment. Since these entities are not regulated today, there is no either core principles or regulatory regime that requires them to have specifics in place. And so many of these entities, some of the larger ones, have reached out to us to get that perspective, to get a fresh pair of eyes looking at their environment to say, okay, can we grow on the trajectory we're on? Will we have anything that blows up and bites us? Are these things truly as bulletproof as my technology people tell me they are? So we've done some of that operational risk reviews for some crypto platforms. And at the same time, have followed the evolution of really institutions coming into the space, the evolution of crypto hedge funds, market making firms, asset management firms these days, and now coming up fast is crypto prime brokerage. So the industry is maturing. The adults are coming to the party the last couple of years. I've been following the crypto space since approximately 2013, 2014. So 8 or 9 years of a 10-year life cycle so far. Interesting to see the players in the space and really on a day-to-day basis, what's in the news, what's the headlines. Certainly the volatility of things like Bitcoin have made headlines on national news, and try explaining how Bitcoin works to your parents or your grandparents. It's a fun exercise. My favorite phrase is markets are evolutionary, not necessarily revolutionary. I've seen the Deutsche Terminbörse eat the life markets lunch by stealing the majority of Bund trading over an 18-month period in 96 to 98. BrokerTech, ICE, Archipelago. I've seen some of these things, but our industry doesn't like things that are too revolutionary. Our industry doesn't like monopolies. We don't like duopolies. And so there's a lot of new, exciting technology coming out, and that has come out those couple of years, and more stuff that we haven't even heard of yet that people will adopt. But this is part of the evolution of the marketplace, and I think that understanding that paradigm, if you're a provider of services, one of my other favorite phrases is what I call ISDN. If you're a seller, it stands for I smell dollars now. And if you're a buyer, it stands for I still don't know.
John Lothian News would like to thank those individuals who have contributed to our Markets for Key Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.